Welcome back to Part 4, the final installment of our simple four-part masterclass on credit data engineering. In Part 1, we isolated your network infrastructure by freezing background data tracking networks like LexisNexis. In Part 2, we engineered your dispute mailroom strategy to clear the eOscar electronic filtering systems. And in Part 3, we executed a complete system purge by auditing raw Metro 2 closed account formatting errors. Now that your credit data architecture is completely flawless, it is time to shift from profile defense to raw wealth leverage. Today, we are looking at the exact sequence to plug your clean profile directly into the institutional funding matrix. Most people think a clean credit file and a high score are just for looking pretty on a consumer phone app. But corporate wealth engineers know that a clean file is an asset designed to clear Tier 1 banking risk scorecards. When you apply for high-limit funding, premium commercial underwriting engines scan your profile for data consistency signatures. Because you wiped out the back-end software contradictions in Step 3, your file now signals absolute risk stability. The machine learning approval grid reads your file data exactly like a secure corporate financial asset vault. This structural data purity allows you to bypass the traditional consumer borrowing restrictions completely. You can now step directly into the high-limit business credit sandbox where the real liquid capital lives. The master sequence starts by establishing deep deposit density and data velocity within your target banking systems. You do not just walk into a bank blind and ask an underwriter for a $50,000 line of credit. You strategically build transaction path metadata inside their internal ecosystem weeks before you submit an application. Open a commercial checking node at a premium Tier 1 funding institution like Chase, American Express, or Bank of America. Route your primary revenue operations and capital loops through this account to build up an internal relationship scorecard. The bank's internal underwriting algorithm tracks your daily deposit density and cash velocity every single month. The machine builds a private relationship tier for your profile that exists completely outside of standard consumer credit bureaus. When the algorithm scans a flawless credit ledger paired with high relationship data velocity, the system flags you for maximum leverage. This is how top wealth strategists secure massive corporate funding rounds without triggering automatic risk rejections. The next phase of the sequence requires you to structurally isolate your personal assets from your corporate liabilities. Most retail business owners make the mistake of personal guaranteeing every single piece of debt their company takes on. They link their personal home, their savings, and their personal credit safety directly to their corporate credit cards. If the market shifts or a corporate revenue pipeline dries up, their entire personal financial existence is immediately destroyed. To break this dangerous trap, you must leverage your pristine credit profile to build independent corporate credit authority. You utilize your clean consumer data strictly as an algorithmic cosigner to unlock initial corporate lines of credit. But you ensure every funding contract you sign contains clear language that limits your personal guarantee liability. You transition your business onto corporate credit cards that report exclusively to commercial data warehouses like Dun & Bradstreet. This keeps your high-limit business utilization completely hidden from your personal consumer credit reports. Your personal credit files remain unburdened by corporate operational costs, keeping your debt-to-income limits perfectly clean. You have successfully built a self-sustaining funding matrix where your business capital finances itself. This structural isolation allows you to acquire physical assets, real estate, or business equipment with maximum leverage. You are no longer playing a basic retail game of point chasing or tracking minor score changes on a mobile dashboard. You are operating at true system speed, turning clean data profiles into liquid corporate capital. This is the ultimate end goal of the entire credit engineering system we have built across this four-part series. You do not fix your credit just to buy retail consumer liabilities and slide back into the consumer sandbox. You fix your credit to build an unassailable financial fortress that grants you permanent access to institutional capital rails. The four-part system purge is now complete, and the blueprint is entirely in your hands. Take control of your data, execute the secondary freezes, locate the software errors, and launch your corporate funding sequence. Build your deposit density, protect your personal profile, and deploy your newly engineered leverage at true system speed.